I'm going to talk about 10 differences between the following financial analyst roles. Now, I'll kick it off with the investment stage involvement. All the way on the left-hand side, you'll see that the venture capital analyst deals with companies very early in their life cycles. And then the investment banker will help to take the underlying company public. Then the sell-side analyst will launch coverage on that company. And what that means is they will help to sell that company to buyers of that stock, which includes the buy side, which are mutual funds as well as hedge funds. And then when the underlying company that's publicly traded now is quite large and the executives within that firm are very wealthy, then a private wealth analyst will approach them and try to manage their money and preserve their capital. And then lastly, we have the big company analyst. The bigger that companies get, the more that they need to hire people to help out close the books or do rudimentary accounting. And then, looks like there's one more here. Wow, what is that? Is that a shark? So when a company gets too big and it dies, or it should be taken out of circulation and restructured, then we have sharks. And we refer to these people in the financial sector as private equity analysts or activist investors. And we don't know who this shark activist investor is, but it's a mystery. We'll find out later in the course. I hope you enjoy this. All right, next up, number 2, experience needed. So at the left end of the spectrum, we have the big company analyst. You don't need that much experience to work at a large company as an analyst. Okay, and that means a non-financial services firm. Next up, we have the private wealth analyst. And you just have to have good personality skills there, because what you're trying to do is to get a lot of high net worth investors to let you and your team of private wealth analysts manage their money. I'll talk about that in a lot more detail later. Next up, we have investment bankers. You don't really need to have that many skills to get hired, except for how to understand very basic financial analytical skills and how to create models. Then we have the sell side analysts that require a little bit more experience because they're preparing financials and dealing with a lot of clients, meaning the buy side. And the buy side, you can see there, are the mutual fund analysts and hedge fund analysts. And these people buy stocks. And so you need a little bit more experience to be able to have a sophisticated investment mindset. And the hedge fund analyst role is a bit harder, and you need a little bit more experience than mutual fund, because you're not only betting on stocks that will go up, but you're betting on stocks that will go down. And then on the right end of the spectrum, you've got the private equity or shark analyst that tears apart deals and restructures companies if needed. And then the venture capital analyst. And in both of these roles, you need a lot of experience, especially venture capital, where you might be sitting on a lot of boards. And so you need to have a lot of experience when you're giving entrepreneurs advice when you're sitting on boards. So you tend to do this later in your career. Number 3, we have stress. On the left-hand side, you can see the big company analyst has the least amount of stress. They also have a very long life cycle working at the respective companies they're at. Then we have the venture capital analyst, which is long-term as well in focus, and so it's less stressful. And I've worked in venture capital. I've worked on the sell side. I've also worked in the hedge fund industry, and I can tell you which ones are the least stressful, and VC is not that stressful. Next up, we have the sell side, and the sell side gives advice, as we know, to the buy side, but they don't buy stocks themselves, so it's not that stressful because they don't get investments wrong or lose money personally if they do. Then we have the private wealth analyst, and I put the stress a little bit higher up here because in private wealth management, you're dealing with a lot of abrasive, sometimes high net worth investors, and that can get pretty stressful at times. Then we have the mutual fund analyst, where it can be stressful around earnings seasons, getting earnings right. And then we have the investment banker analyst that works 100 hours a week, and that's pretty darn stressful. Then we have the private equity analyst that works crazy long hours around deal time. And then the hedge fund analyst, which is the most stressful of all financial services professions because of the very short investment time frame. And quite often, hedge fund analysts are wrong for the wrong reasons, or they're what I like to refer to as fooled by randomness, which is unfortunate. And then politics. Private wealth analysts have the least amount of politics because they can pick up and go. They can take their whole teams and leave the bank they're working at and go to another bank if they want to. So it's less political. Similarly, venture capital firms are not that political because there's only a couple of partners at each firm. They're very small personnel-wise. The same can be said for private equity shops. Hedge funds are a little bit political, maybe not as much as mutual funds because hedge funds are a lot smaller. And then we have sell side. Sell side is a bit more bureaucratic because there are just a ton of employees there. And then the big company analyst sees a lot of politics as well because it's, well, a big company, just like governments are political. And then lastly, we have the investment banking analyst where it gets very political because there's a lot of compliance rules and you can get into trouble easily and break the law easily. Number 5, we have, are you being micromanaged, which is the worst. On the left-hand side, we have private wealth analysts. They're not micromanaged because, heck, they work in small teams. The same can be said for venture capital analysts where they are lone wolves. They're not really micromanaged at all. Same can be said for private equity analysts. And then in the middle there, we've got hedge fund analysts that can be micromanaged by their portfolio manager, but not as often. They're on the road a lot. Mutual funds are a little bit more micromanaged, although it is debatable than hedge funds. And then we have the sell side where you are a bit more micromanaged by compliance as well as your chief information officer or CIO. And then we have the big company analyst who gets micromanaged all the time because they work for a big company. And then the investment banking analysts who get told silly little things like move that bubble over on your PowerPoint slide 1 millimeter or change the font in this Excel spreadsheet. You get micromanaged a lot there. Travel. The big company analyst doesn't travel very much. The private wealth management analyst doesn't travel much either because she or he tends to cover a territory close to where they live. Usually your territory is the state you live in. The venture capital analysts usually invest in companies that are close to home, especially here in the San Francisco Bay Area. And then we have the investment banker analyst who has to travel around deal time. And the same thing with the private equity analyst and the hedge fund analyst. They invest in companies all over the world, so they travel a lot. Same can be said for the mutual fund analyst and the sell side analyst who holds conferences for the buy side, usually out of town at really cool places that are a lot of fun. Number 7, how much can you learn? Unfortunately, the big company analyst doesn't really learn that much except for how to navigate politics in the firm they work for. Next up, we have the private wealth analyst who doesn't learn too much either because they're focused more on relationship management than they are on portfolio management. And then we have the sell side analyst that has a very repetitive job. And again, I'll explain what that means later. Then we have the private equity analyst who actually learns a bunch. Same can be said for the investment banking analyst. You learn a lot when you work on origination or the creation of deals. It's pretty exciting. Venture capital, you're creating industries or you're investing in people that are creating industries. It is fascinating. You learn a ton. Mutual fund analysts are actually very fortunate because they get to meet with the top CEOs in the world and learn from them because they invest in those companies. And the same can be said for hedge fund analysts. Now, in terms of the number of hours, all the way on the left-hand side, you can have a great quality of life working at a big company as an analyst, although it can be boring as well. Then you got private wealth management where the hours are pretty good, but sometimes it's hard when you're going out and gripping and grinning with new clients, having dinner with them, etc. Then venture capital, the hours are not that long. The same can be said for private equity. But in both of those respective roles, if you're working on a deal, then the number of hours can be very long for a short period of time. Deal time stressful as well. And then we've got the mutual fund analyst that works very long hours only 4 times a year around earnings season. Same can be said with the hedge fund analyst and the sell side analyst that works very long hours around earnings season and non-earning seasons because they're traveling a lot, meeting with tons of clients. And then the investment banker analyst works 100 hours a week almost all the time, which is unfortunate. Let's move on to marketable skills. The big company analyst doesn't really have that many marketable skills. All they've really learned is how to navigate politics at their firm. The same can be said with the private wealth analyst. There's not that many marketable skills, but what I will say is that in private wealth management, as in all industries, relationships are often more important than product knowledge. It's a cliche. It's not what you know, but whom you know. Then you have the hedge fund industry where you don't have that many marketable skills because if you get fired a couple times, which happens to a lot of analysts, then you're no longer marketable. Now, the private equity analyst is a little bit more marketable because you're doing very sophisticated financial analysis and restructuring. Mutual fund analysts and venture capital analysts are long-term focused, which is always more of a marketable skill set. And the sell-side analyst is usually very affable. They can present incredibly well. They understand finance. They understand qualitative and quantitative topics. And they're marketable. And quite often, some of the best sell-side analysts become CFOs or CEOs in companies. It happens out here a lot in the San Francisco Bay Area. And then lastly, the investment banking analyst is incredibly marketable because she or he works on origination or they create financial products. And so it's easy for them to get a job selling or marketing financial products as well, or trading them for that matter. Lastly, we have teamwork. On the left-hand side here, we have the venture capital analyst who is a lone wolf. The same thing with private equity analysts. They work on their own. They try to get deals or source deals, especially the more senior they get. And then we have the hedge fund analyst who is out of town a lot trying to understand companies. Same can be said for the mutual fund analyst. But there's a lot more teamwork when it comes to investment banking where you're working together hard on deals always. The sell side role is much more team-oriented than other roles within an investment bank because they partner with sometimes investment bankers called equity capital analysts, which I'll explain later, as well as salespeople and other people at investment banks. Then we have the big company analyst who does a lot of teamwork because it's a big company. And then lastly, private wealth management. They tend to work together in their teams. And again, they can pick up and leave and quit as a team as well.